Hi, Andrew Cooper here, Advice for Living Financial Planning in Diamond Creek. We're now in week 3 of the market uncertainty that was triggered by the coronavirus. In early trade today, the Australian share market is up about 2%, and in overnight trade, American stocks were up over 4.5%. To my mind, this just demonstrates how the market inevitably overcorrects both ways. It goes ahead too far too quickly and comes back too far too quickly. Over the last 2 weeks, I've continued to be frustrated that share markets react in such a volatile way. If everybody would just take a breath and look around, market conditions would be a lot more stable. What tends to exacerbate the fall in share markets is that many of the large investment houses have automatic sell orders built into their systems, so that if a particular share or a market index falls below a certain level, then they automatically sell without anyone making a decision about whether or not there's a need to sell. This then spirals downwards as more and more automatic sells are triggered as prices drop. This has driven a lot of what we've seen over the last 2 weeks, and thankfully some level of common sense appears to be returning to markets. Share markets are typically driven by fear and greed, and over the last 2 weeks up until today, fear has been in the driver's seat. So my message again is please don't panic. For those of you still concerned, can I ask you to consider, if you were to sell out of your shares, where would you invest instead? The price of Australian shares may have come down particularly, but typically they pay dividends of around 4 to 5% a year. So if you were to sell your shares, you would be left with investing in either government bonds or term deposits, which are returning about 1 to 1.5%. This could get even worse if the Reserve Bank acts to reduce cash rates today. And in addition to that, a number of the banks reduced their deposit rates recently without any relationship to the Reserve Bank. So share market prices might be coming down, and that's not a good thing, and I can understand that people are concerned. But remember that the dividends from your shares are probably better than pretty much anything else you could get anywhere. Another reason not to panic is to remember that when share markets recover, they typically do it quite dramatically and over a quite short time period. As I said, over the last 2 weeks, share markets have been down around 10% around the world, but the American share market was up over 4.5% just last night. So the idea of selling out in the hope of buying in before the market recovers is a very dangerous strategy. For our clients, the message is always that we have endeavoured to invest you in the correct assets for long-term returns. For those of you in pension, you are drawing your income from your cash bucket, and so there is no volatility there. In addition, there is ample funds to allow time for the share part of your portfolio to recover. For those of you who are in accumulation, as long as you haven't sold, you haven't lost anything. I still expect there'll be continued volatility in share markets around the world until we get the coronavirus issue is either resolved or we get some sort of sign that it's being contained. So we may well have some bad days as well as some days of recovery. So I would recommend you consider them simply as bumps in a long-term journey where share markets are typically returning around 9% a year. So hope that all makes sense. If you've got any concerns, do please contact us. But as always, we'll be keeping an eye on markets. Thanks.